Hey traders, Barry Burns here with Top Dog Trading, and today we're going to do a little quiz. I've done these before, people seem to like them, so here we go again. All right, so today we're going to talk about trend, and this is in response to a question that I get quite often when people ask me what is the trend of any given market. So whether it's the Eminis or Forex, Euro, yen, whether it's gold, commodities, crude, whether it's a stock, etc. And people just ask me the general question, okay, what is the trend of this market? So let's discuss trend. All right, so like I said, we're going to do this as a quiz. So here we've got, we'll start here. We've had, let's move down. Retest, up, down, up. Okay. In fact, let me take the crosshairs off. Let's find that a little distracting, actually. Okay, so we'll just start here on the hard right edge of the screen, and this is your quiz. All right, so the market moves down. So would you consider this a downtrend at this point? Yes or no? Best thing to do if you really want to take advantage of this quiz is to write it down so that you're really committed to it instead of just answering in your mind, because we have this amazing way of kind of tricking ourselves with our brains to say, oh yeah, I would have seen that. But this is how we have to trade on the hard right edge of the screen. All right, so would you consider this a downtrend? Would you trade this as a downtrend? Comes back up. Oh, looks like we made another lower low. Lower high, if you're looking at things like that for a downtrend. Let's see what we're doing here. What would you think about this right here now? Are we still in a downtrend, or are we starting an uptrend? Or did you even think we were in a downtrend? All right, so have we changed? Is sentiment changed, or is it still the same? So if you said downtrend, for example, would you now change your mind and say, oops, now we're in an uptrend? Okay, trend reversal trade. All right, commit to that. Because when you trade, you got to commit, right? When you really trade, you got to really commit. Up, up, whoops, down, 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 down. Okay. Makes a lower low. So you could definitely see lower low, lower high, lower low, lower high, lower low. Now, this is where some people might look at this and say, oh, we had a higher low and a higher high and a higher low. So part of the lesson here is what scale you're going to look at your charts with. How do you define a swing high or swing low? That's one of the big things, right? So, and that can get a little subjective. So we want to objectify that, meaning we want an objective rule for how we define highs and lows. I've got a cycle indicator that I use for that, by the way. Happy to share it with you. I used to do the webinars live. Now I have it recorded, so you're still able to, actually it's a little better now because you can access it anytime you want in any time zone, and just go to the URL there and check it out for free, my gift, and I show you how to set up the timing indicator on your charts, and that makes these highs and lows very objective so that you're not guessing, and also helps you to enter the market with precision. Okay, so anyway, comes back down, makes a lower low, comes back up. Okay, now, whoa, off to the races we go. So we got a nice kind of pin bar there. Broke this high, if you're looking at that high. Broke this high, look at that high. All right, and now we are careening off to infinity and beyond, and up and up and up. Now, are we in an uptrend? This is my pregunta for you today. Or if you're from Deutschland, this is your Fragen, the Fragen for the day. All right, so would you consider this an uptrend? Alrighty, so then let's, oh, whoops, oh, if you did, then that might be no bueno, because now all of a sudden, kablambo, and we go screaming down. And yes, kablambo is a traditional classic technical analysis term. I believe it was, I forget who made that term famous. Oh, I think it was me. Or infamous. Anyway, so kablambo comes on screaming. Oh my gosh, breaks that low, breaks that low. Now, would you consider that we're in a downtrend? How would you define trend? How would you define trend? Are you changing your mind every couple of minutes? And what are you going to do now? Would you trade the breakout of this low? Would you trade the breakout of that low? Would you wait for a retrace? You don't get a retrace. So what you going to do about that now? come back on up. Okay, ooh, is this a V bottom? Are we reversing? Are we going up now? Or is this just a retrace and a downtrend? Make your decision. Market's moving bar by bar. You better hurry up. This is only a 2-minute bar. Not going to give you much time. Still going up. Still, oops, kind of sideways. Whoops, wait, what? Okay, going, whoops. Oh, it's going up. Whoop, nope, it's coming down. Whoop, nope, it's going up. Wait. Yep, it's screaming up. Breaks this high. Alrighty, how fast are you? Whoops, new day. That's what that vertical lines means. Now we got a new day coming, and we're going up. And now it's going up, and now it's going, whoops, wait a minute. Now where are we? Uptrend or downtrend? You call it. Uptrend, downtrend, or I don't know. I don't know doesn't make you any money, by the way. Remember that. So, whoops, goes up, whoops, comes back down, whoops, goes back up, whoops, consolidates, whoops, breaks this high. We traded that breakout, oops, came back down below it, then went back above it, then went back down below that high. So for breakout traders, you broke the high, then you came below that high. Broke the high again, came back below that high again, broke that high again, and I came back down, broke that high again. The bane of breakout traders is this kind of price action. And oh my gosh, and then a new day. Okay. So you might be wondering, hey, how come I'm only seeing half of the screen? So let's unveil the other half of the screen now. All right. So now what I'm going to do is I'm going to bring up my global crosshairs, and let's see something interesting. Remember at the very beginning of this presentation, I said that trend is based on the scale or the fractal of the market that you're looking at, okay? So if we go back here to the 4th, we were on August 4th, and this is what we're looking at. Now, obviously, I'm changing the scale here. And so here's where we saw the market, go screaming up, and then we saw this downtrend, but then, well, supposed downtrend, depending on how you defined it. And then we got the higher highs, higher lows. But look at what's going on the right side of the chart, okay, or the right side of the screen. The separate chart on the right side of the screen. So we got a 2-minute chart on the left side, and we've got a 3-minute chart on the right side. Okay, so let me just, in fact, let me squish this scaling up even a little bit more so we can get the whole day on there. There we go. So compare what it looks like visually. I've got the whole day on there now. Oops. Okay. That's about as good as I'm going to be able to do it. So look at what the market looks like visually on a 2-minute chart on your left, the exact same market on a 30-minute chart on your right. Would you say there's any trend on the 30-minute chart on the right? In other words, same question. What is the trend? Let's see if I can keep my crosshairs in the right place. There we go. So over here on the right-hand side, the right chart, the 30-minute chart, is there a trend here? Okay, I would argue no. I would say this is just a sideways market. This has not really gone anywhere. This day is just a sideways day. But if you put it under a microscope, so to say, this is like your telescopic point of view, and daily would even be more, but if you put it under a microscope and look at the little movements inside of those 30-minute bars, I mean, here you're getting more than 10 bars for every 1 bar on the 30-minute. And we got lots of action over here. We've got swing highs, swing lows that could be traded, but we don't have that on the 30-minute. So my point is that in trading, trend is relative. There's no such thing as the trend of the S&P, or the trend of the euro, or the trend of gold, or the trend of oil, or the trend of the yen, or whatever. It's all relative to a time interval. And that's true of everything in the market. Where I see, in a practical sense, where I see people getting hurt by this, is they've got maybe 3, 5, 10 different time frames of the same market up, and they're looking at them all at the same time. And then they get confused. Because, like I say, they might look at a 1-minute chart, the trend's up. Look at a 5-minute chart, the trend's down, or just consolidate. Look at a 30-minute chart. Ooh, now, it's kind of going up, but on the daily chart, and they'll look all the way up to a weekly chart. And here they're trading everything from a 1-minute chart to a weekly chart, looking at them all at the same time. And it's confusing. And it is too confusing. It's a mishmash of overwhelm and confusion. So for me in my house, I only would trade 2 to 3 time intervals at one time. Look at only 2 or 3. That's it. No more. Don't need any more. It just becomes confusing after that point for me. How to choose the best time intervals. If you want to send me an email, I can go into that, or maybe I'll do another video on that as well. I've got a blog article on that if you want to see it. But the point of this video is just that it's all relative, and that's okay. And it will work on whatever time interval you're trading. So you don't need to worry about all the time intervals out there. Now, I do find it very helpful to trade multiple time frames, but you can go too far with it as well, where everything just becomes very hard and has no meaning to it anymore. Okay, my friends, so yeah, that's it. Stick to one time interval, get to know that time interval, build up the repetition based on that time interval, and so that your mind gets acclimated and used to it, and your brain cells start resonating with the rhythm of that time frame, whichever one you choose. And then trade the trend, the cycles, the momentum, the support resistance on that time interval, and don't worry about the rest. That's your game. Okay, you choose your game, your time interval, and you say, this is my niche. Everybody else can play their other niche. People want to trade 60-minute charts. That's cool. They're going to get different trades than me. That's awesome. I'm trading the 2-minute. Or maybe it's the opposite. You're going to trade the 60-minute. Let other people trade the 2-minute. Whatever it is, just stick with it. Get used to it. And don't think there's anything such as the trend. So there you go. By the way, got a great trade for you, the rubber band trade that I give free to all my followers, which is you. So since you're watching this video, be happy to give it to you. Just go to rubberbandtrade.com and I'll give you a little mini course in there, which includes a free trade setup that works really well. I still trade this setup every single day. Again, it's called the rubber band trade. Give it to you free. It includes the entries, the exits, everything. So hope you found this helpful. Write some comments or questions down below, and I'll be happy to respond.